So here you have four types of investors investing in different countries in different way. So I just want for each of them to explain in what kind of startup you are investing, what kind of amount you are investing, and at what stage. Let's go with David.
So hello, welcome. You're all awake? You're still here? Hey, I'm David Hornick from August Capital. Let's see, our smallest investment was a $500,000 investment in Travis Kalanick's last company. And our largest investment was a $130 million investment in the buyout of Seagate. So if you fall somewhere in there, you can come talk to me because we're likely to invest in you. We actually have two funds, one an early stage fund in which we typically invest $4 to $8 million in kind of your first professional financing. And then we have what we call our Special Opportunities Fund, which is a later stage fund in which we invest $25 to $50 million on average in kind of small buyouts or late stage financing. So a pretty broad set of investments.
Hello, my name is Steve Luzon from 5M Ventures. What we do is media for equity. I don't know if here some of you heard about media for equity. It's a new investment model.
Who heard about media for equity?
Okay. So maybe
20%.
you know 5M Ventures. What 20%. We do is that we invest in startups, but we don't put cash in the startup. What we do is we do media campaign. So we do a media campaign for the startups that is adapted to the needs of the startup. And against this campaign, we take shares. So this is our model. It comes from mainly Germany, where Zalando began with media for equity. So Zalando in 5 years has more than $1 billion sales. How can they manage to have such a big growth? Because they need media to grow, and they made media for equity with German media groups at the beginning. So this is what they did in Germany, and now in France, this is what we are doing. We invest, the minimum amount is 300,000 euros in a startup, and one of our investment was Job Around Me, for example. It's a mobile application for recruitment. This is what we do, and we plan to invest more than 5 million euros in the next 2 years.
Okay, I'm Mark from Shipstead. I'm actually from Shipstead Grove, which is the third development branch of Shipstead in digital. One is being the media side, the other one the classified with the leading position in the world, and the third one is actually investing in startups. We are active in Paris, in Oslo, and Stockholm. We have actually 30 companies in our portfolio. We started that more than 10 years ago in the Scandinavian area. And we invest from a couple of hundred euros, 100,000 euros, to up to millions. It's really depending on the case, because our philosophy is that investing money is good, but supporting companies is better. And we actually invest a lot in providing traffic, in providing brand recognition by visibility online, and by providing expertise in growth problems that a lot of startups can have when they start ramping up and developing their business. So I'd be happy to talk to anyone that is interested in such a model. Thank you.
My name is Ilan from Our Crowd. I'm a general partner at Our Crowd. Our Crowd is a crowdfunding, equity crowdfunding platform which was launched about 12, 14 months ago. We're really a sort of a mix bringing together VC investing, angel investing, and crowdfunding. In the last 14 months, we've funded about 30 companies, some of which we've actually done a second round of funding for already. We're investing across technology, so mobile, internet, social, security, med tech, really across the board. We have a professional investment team in-house. We invest our own capital, and then we bring in angels, really our crowd of investors, which are global investors from around the world, to join us in our investments. We invest anywhere from about $300,000 in early stage seed companies. Zula, which was up here 5 minutes ago, was one of those, all the way up to, we've done things in Series D and Series E rounds. Our largest investment has been a little over $2 million, which was part of a $6 million round. And about 60 to 70% of our investments actually are co-investing alongside other VCs. We generally think of investing as a team sport and like to have a lot of smart people around the table.
Thank you. So here, as I said, you have different type of investors. So here I want to ask questions to each of you to really more understand deeply how you are looking in the market and how you are finding the right startup for you. I mean, so as you said, you are making seed investments. Are you like any other angels throwing money like us, you know?
Yes, willy-nilly. We just throw it at anything that breathes. Actually, August doesn't tend to invest alongside other angel investors when we do early stage investments. We tend to find teams that we like. We want to invest our time, not just our money. And so it's very hard to do that across 20, 40, 100 companies. And we're kind of your traditional early stage investors. And so when we invest, we put in the money and go on the board and get involved. So I put the first $1 million into a company called WePay in the payment space, which was really a seed financing. I put the first money into Splunk when it was just 3 guys and an idea, although that was quite a bit larger investment. So we think that seed stage is just another opportunity to look at entrepreneurs, but there are a lot of people in Silicon Valley who think it's an opportunity to kind of put in their foot in the door. Hey, call me when it's working, and that's not how we view it. We think that if we're going to invest, we're going to help you build a big company, and if we do that, we're going to put in a reasonable chunk of money, and we're going to get involved.
Is it not easier to invest in late stage investment? It's not more, profitable. You're investing 50 million in a company, already profitable, already growing. Why are you losing your time by spending time with small startups?
It's way less fun, truthfully. That's certainly my view. My view is that the fun stuff is helping you guys build big businesses, right? It's sitting on the board and helping to build the team and watching the business grow, et cetera. I mean, this company Splunk I referenced, there were 3 founders. They had what struck me as an interesting idea, and the end of this year, there'll be 1,000 people in the company. It's a public company. And more importantly, they're big, interesting businesses that are being run on top of Splunk, and it was really transformative. And so when you look at the history of my firm, the partners at August were the earliest investors in Microsoft, Sun, Compaq, Intuit, Symantec, Seagate, Skype, most recently Zulily. So we like to get involved and we like to help you build big businesses. And when it works, it's sort of as magical and amazing as any job you could have.
How are you detecting your targets at this stage? So it is a feeling like that, or you are just quoting a few success, and here you have also 100 startups who died.
Obviously, there are lots of companies that we've invested in that haven't been that successful, but I'd say the ratio isn't what you anticipate. It's not 100 failed to the one, Microsoft or Zulily. I think the amazing thing about the venture business is that every day of the week someone comes and tells you about a business. And so when I first entered the venture business, I thought, oh my God, I'm in big trouble because I don't know anything and my partners know everything. But what I didn't realize was that every day in the venture business is part of that overall education. So I've now been a VC for almost 14 years. I've heard 1,500 pitches. I've spent tens of thousands of hours learning about businesses. So then when the next one comes to you, you have that as your context. Now, you could still get it wrong. I've said no to all sorts of amazingly interesting businesses, and I've said yes to businesses that turned out to be less interesting. But if you have the good fortune of having smart people come in every day and tell you about their business, you may well fund things that turn out to be transformative.
Thanks. Are you investing outside the U.S.?
We have and have invested outside the U.S. We will continue to. We've invested in companies in Israel, in Germany, in companies that have had offices in other parts of Europe and Asia. So we definitely will look at companies all throughout the world. I would say that it is easier for us to be helpful locally, and so the bar is quite high in other places. But even in the United States, I mean, we've invested in companies in Texas and in Chicago and in Seattle, et cetera, and the bar is higher for those because we want to be sure that we can actually be more than just money.
Thank you. So if I'm a startup from Israel, let's say, at which stage can I come to you? You say that, okay, the bar is higher, but it means that a company at seed stage with no revenue is not a good target at all?
It would be extraordinarily hard to get funded by us at a seed stage. You know, we funded Radland when part of the Rad group had a lot of history behind it. We funded shopping.com, which ended up merging two interesting businesses, but there was a fair amount of information. So we tend to invest in people, and so the closer those people are to folks with whom we've worked in the past, the more likely it is that we'll invest earlier. So I'd say that it is easier as it gets later stage, and there requires less involvement and there's more data. But that doesn't mean that that's the only point at which we'll invest. We're looking at companies all the time that are more traditionally Series A, post-seed, traditional Series A, where there's some data, there's a team. We get excited about the team first, the business second, the market. Those are reasonable fits for August.
The last question. You're coming to France almost every year for the web.
This is every year. This
every
is
year.
My 10th
10
year.
years, something like that, yeah.
Me and Clavier, I think. Loïc, Geraldine, Clavier, and myself.
Yeah. So did you already invested in France?
Well, the advent of it is that I had invested in a company called Six Apart in the blogging space, and Six Apart acquired Loïc's company, which was based in Paris. And so we had this very early on office in Paris. So when Le Web started, it was actually Les Blogs, and it was the European blogging conference. So I think that is the only French presence that we've had, but that's not determinative.
So. But why? Why? What's happening? What's with French? You're here every year. You're seeing a lot of people, and you never invested here.
It's true. What's wrong with the French? Why can't they convince me after 10 years? Well, I've now finally found arpège, and it's so delicious that I think we're getting closer. There's not a thing. I mean, I come here because I think that's it's a gathering of really smart people who care a lot about company building, right? Yourself included, right? You care about the process of building amazing businesses. You invest in people who are trying to build transformative businesses. I have seen companies that I've gotten involved in, whether those were US-based companies or European companies, while spending time at Le Web. I think that this is a process that you have to understand that you have to get to know people. You have to get to know co-investors. You have to get to know individuals who are building companies, and over time, those relationships build. So give it time. Maybe in year 11, I'll invest in a company based in Paris.
You can tomorrow too. You know,
That's
you
true.
have another 3 days.
I'm here all week. I'm here through Sunday. So.
Thank you very much, David.
Yeah, thanks.
Thank you. So let's talk about another way to get. It's not money this time. It's not money. It's exposure, I'd say. So what kind of targets? What kind of startup are you targeting?
Yes.
In which sectors? And who do you think need exposure on a TV channel?
Okay, so we look for B2C startup or C2C startup. You need to have a very strong focus on massive audience, okay? When you are a B2C startup, and one stage in your development, you think you want to go to the next level. So when you're a B2C startup, you begin to make some advertisement in the internet, try to make performance marketing at this step, okay? Once you think, okay, now I want to go beyond just performance marketing, and I want to go to the next level and to have notoriety, to make a brand, then media for equity can make sense, okay? What is the idea? You can have much higher level of investment in media through big media space, in outdoor, in the internet, in press. This is what we provide, okay? We we realized that B2B2C startups have a very notoriety can have a very strong impact because it gives notoriety for the B2B clients, and at the same time it brings a customer in the company.
Can you give some example, good example of what's working, what's not working?
Very simply, one of our last investments was Job Around Me. So it's a mobile application to recruit people. Okay, the Jean Marriott has two issues. First one, at a very short term, need to have a higher level of downloads. Okay, and to have a higher level of downloads. The second, more long-term goal was to have notoriety, so that anybody wants to apply to a job thinks, okay, now that I need to apply, I know that Job Around Me is existing. So you have to be top of the mind in the head of the people. So to have these two impacts, you need to have first, of course, a very strong presence in the mobile medias and internet media. But for the second impact, you need to have notoriety and to have much massive media and to gain notoriety. So this is what we do. We come when the startups already were doing more than 200,000 euros of sales. It's not a lot, so it's quite seed investing. And then when we see that after a first step, a first investment, we see that it works. So we go step by step. Then we go to a second step to a higher audience. And what we do is that we have partners in other countries, like in Germany. And when we see that a startup can work very well, we try to help them to develop all over Europe. So this is our goal, to take B2C startup, try the media in France, it works, go higher in France, and then try to help them all over Europe when they need media to really massively develop themselves.
So your fund is almost unlimited. I mean that you have a lot of media with a lot of empty space, a lot of TV channels, everything.
No,
so it means that at the end you can invest in all our startups tomorrow.
No, it's not unlimited because we have strong links with a few big media groups that give them media space. But what is true is that just in France, media company sales is 10 billion euros. Okay, it's the sales of media companies. Okay, and if 1 or 2% are invested in startups, it's 200 million euros invested a year. So media for equity can be very, very strong. In Germany, all over Germany, 300 million euros are invested every year in media for equity. So it's massive. Today in France, there are 2 funds doing it and communicating about it. Us, 5M Ventures, and L'Express. It's a French magazine that...
also, I think.
I don't know if Raphael is still here, but still they made a fund for their own media and they invest in startups with the same principle, media for equity. Yeah.
Thank you very much. So the moment you're investing only in France?
For the moment, we invest for startups that need to develop themselves in France and that need to have a massive presence in the French media.
So it can be throwing startups who want to enter into the French market?
It can be a small French company that needs to develop in France, or I don't know, an American, an Israeli company, or now we talk with Spanish companies, for example, who wants to develop in France, and then we can provide them the tools to develop in media for equity in France.
Thank you.
But one of the elements that we look is that we try to find startups that will need will be able to internationalize afterwards. So France has to be a step, but then we need to help them all over Europe, and even in Canada there are media groups that try to do it now. So it's getting more and more internationalized.
Yeah, but at the end, if they want to expand, they need to raise more media from you. So at the end, you will own 80% of the company because you promoted it in 12 countries?
So no, in the other countries, it will be more our partners that will help them. So it will not be 5M. It will be, for example, in Germany, German Media Pool, or there are other funds in other countries. But of course, media can be very capital intensive and it needs a lot of money. What we do is that we try to find clever financial tools not to dilute too much the funders. So, of course, we are very sensitive with that. We think that marketing is one of the elements that need to be financed. So, it has to be a responsible dilution, not too much.
Are you investing at higher valuation than putting real money? I mean that, okay, I'm an entrepreneur. I can raise 500K with someone and 500K with you. Why do I need to? I can buy the media myself. You know.
Okay, of course it's a negotiation. So we discuss with entrepreneur on the value of its company and on the value of what we bring. So this is of course a negotiation. From what we did up to now is that we invested at the same valuation of real cash. We invested also in new books, and they raised something like €1 million totally at the same valuation of what we did.
But why I will select you instead of taking the cash and putting 50K, trying, and after that putting another 50?
The idea for entrepreneurs, there are two ideas. One idea is that we, Media for Equity, can invest much more in media when it works. So after a first step that we try the media and the compatibility with a very limited dilution, then we can put 500, more than 500, just for media in France, and maybe more and more. So this is what we can do, and what a traditional investor will maybe not do for media campaigns. Okay, this is one element. The second element is that we are focusing on investing in marketing. So we think that we can bring the ecosystem on media planners, on professionals of the industry, so that the startups has everything at the same time, and they have the advice, they have everything they need to make the right decisions when they want to do their media campaign. So we are not only investing, we're also providing all the tools to do the best campaign for the startups.
Thank you very much. We have a QA session just after that. Okay. Mark, yes. I want to understand why Schibsted is doing this. Well, I mean that why Schibsted is investing so much money in companies?
Because we've done that for 20 years, actually. Because Schibsted is a media group coming from the paper business, and they realized 20 years ago that internet will like a little bit disturb their model, and so they started migrating online everything they have, starting with the media sites. So they have all their media properties, all the magazines, the newspapers have started having websites 20 years ago, and they actually opened the first portal, which was Scandinavia Online. Back in 95. And then they realized that the classified business was taken by the internet, and it was cash cow for the press, and then it went bust. They had no money anymore, so they invested in classified businesses throughout the world, 40 countries.
Invested mean investing in companies that they don't own?
No, they actually bought a couple of companies in Scandinavia, including one in Sweden called Blocket. And Blocket was so successful that they decided that it was a model to follow. And they found 40 countries in the world where the market allowed for launching such a company and taking the #1 position. And it's actually what they did in France with Le Bon Coin. Le Bon Coin started in 2006 and became #1 in the French market by far. Just because Schibsted supported the whole operation with cash in the beginning. So that's the second actually line of development. And the third one is what we do, is that when you have huge traffic sites like media sites or classified sites, Le Bon Coin in France is the #2 site in time spent after Facebook. It's actually #3 after Google and Facebook in page views. So it's a huge site. And we have such a huge amount of traffic, you can really provide support to companies by helping them advertise, helping them being present on the platform, which with business deals, and really fine-tune their growth. Because it's also very dangerous to put the emphasis on one campaign and generate too much leads, too much traffic, and then you're not able to absorb the whole traffic that you've generated. So we just can fine-tune the whole thing. But basically the logic is that we look after startups that really can benefit from being present on Le Bon Coin, on 20 Minutes as well, which is our property in France. But in general, in Scandinavia, it's all the Schibsted properties.
So finally, you're doing almost media for equity things, but you're also putting money in companies.
We don't do kind of media for equity because we
so
don't.
How are you mixing in a deal? Or are you mixing both money and both?
We don't mix things. I mean, we have money that we invest in startups, like we did with Prédunion. Nice one, nice of you for letting us in. But and on the other side, we have inventory that we can sell to a startup. The thing is that when you're part of the same group, then you can discuss deals that are meaningful for both parties. And you just cut all the commercial crap in between, and then you go straight to the points, and you get better support from the specialists that we have, for example, inside Le Bon Coin or inside 20 Minutes, and then you get better deal terms. But we're not actually saying that we will put that amount of euros per minute spent or whatever. Or
so you're not committing on anything?
No.
So it's not dangerous for a startup, to take a big group coming into, be part of my shareholders, and I'm saying, yes, we have a big group, we can help you to promote your startups. I had the Lagardère group in my last startup. They promised me a lot of things, but they don't know to do that.
I remember that one, yes.
and so how are you doing that? Okay, for Prédunion, I don't know, you send Marine, I think this is why it was, but how are you managing that kind of discussions?
Well, we have 30 companies in the portfolio. So, I mean, if we were there to screw them, we weren't in the business anymore. So we have 30 companies. A lot of them are now market leaders in Scandinavia, in classifieds, in webs, in yellow pages, in comparison websites for consumer loans, in comparison website for energy bills, and everything. So you can look at those companies. They just started from where they were, and with using the Schibsted support, they went to become number one on their market, each one of these. And so the idea is you cannot say, I mean, investing in a company is a 6 months process. You meet the people, you discuss with them, you try to understand their business, and then after that you're confident enough that you can provide them with some money or issue a proposal and get their agreement to the proposal. But you cannot really forecast in details what you're going to do with the company for the next 5 or 10 years. It's impossible. I mean, things are changing all the time. So basically, and that's the confidence that that's the proof that the entrepreneurs believe in what we do, is that they commit with us in signing the deal, and because they believe in everything we've done, they believed in what we've done in the past, we've believed in what we've showed them during the process in due diligence, and then after that, then as I said always, the work starts when you've signed the check, and now it's time to develop the company. What's your goal at the end? Do you want to acquire this company? Is a successful company? If we love the company, yes, we want to acquire them. Yes, sure. So now you are investing a little, to be inside and to understand more the model. And after that, if it's working, you are acquiring the entire company. I know that Prédunion will be sold. I like your idea of a little round. It's a 10 million euros round. Yeah, sorry, yeah. But but you have little shares. Yeah. So you're inside. So now I know that if Prédunion will be successful, you will be the acquirer. You have cameras here, so you can. We'll try. Yes, of course. Yes. It's certainly. This is the concept. Yeah, it's the idea. But I mean, in the world, it's not always black and white. I mean, there are many versions of the story that you can tell. Some companies really need to have industrial investors, like Prédunion, for example. They need a bank, they need more marketing partners like us, or financial partners, or Kima to start the business. So they really need something that, the kind of mix of investors that will help them really in developing their business. So that's one kind of companies. Others, we can just make a deal with the founders and say, yeah, okay, we will support you for the next, let's say, 10 years. And we end up being market leaders with you or without you.
Understood. Thank you very much, Mark. Thank you. Helen, so this is another type of investors. So our crowd is becoming very famous in the Israeli industry. You know, we are seeing a lot in the world, we are seeing a lot of crowdfunding platform. They're saying, okay, please start up, please come to us, and we will help you to raise money from little investors. And at the end, you're seeing the amount raised is always 50K, 100K. It's not really working a lot. In the US, we are beginning to see some good successes in this world. But here we have in Israel, you know, in the last 14 months, a revolution with our crowd, when we are seeing a lot of startups raising a lot of money. I think you raised more than $20 million.
Close to 30.
$30 million. So 30, it means that you have small investors put $30 million in 1 year in many, many startups. For the moment in France, we don't have that kind of thing working. We have some people trying. So I want to understand more your model and why, besides the fact that you have an awesome CEO, John Medved, but why your model is successful.
So I think it's a good question, and I think there's a couple of things. I think there's a couple of trends globally that are playing into it. One is the trend of crowdfunding, or I would say more generally of somewhat disintermediating traditional financial models. Now, I come from the traditional financial model of investment banking and VC, as do my partners. So, you know, we all know that model and we've done that. But I think this actually goes back, you know, almost 20, 30 years, and it's accelerated recently. If you think about, you know, 20, 30 years ago, 30 years ago, the whole advent of online brokers, E-Trade, Ameritrade, right? This was for publicly traded securities. People said, you know what, I want to start doing it myself. I want to start buying securities online. I don't need a broker to be the middleman to pay high commissions to, and so forth. And they started doing that online. Now, if you'd said to people in the early 80s, you're going to buy stocks electronically over the internet without a third-person broker in the middle, people would have laughed. And today, of course, these are huge companies, and it's a massive, massive industry. More recently, if you fast forward to the last couple of years, you've got things like Lending Club, which our CEO and my partner, John Medved, is actually a seed investor in Lending Club. Lending Club is doing billions of dollars of peer-to-peer lending in the United States right now, disintermediating, literally, traditional banking industry. So I think that's now coming to equity financing. And we launched this about a year ago. What we decided was to focus on a model which really is a blend of traditional VC and crowdfunding. What that means is we bring accredited investors to our site, so it's not open to everybody. People have to be an accredited investor, which is a legal term in different countries. You have to have a certain net worth and a certain sophistication. You register to our site, and then you become one of our crowd, one of the members who can invest in our deals. Why it's been successful, we think, is because while we've brought that to the table, we've also kept a traditional VC model where we have a professional investment team inside. Each of myself and my partners each have between 15 and 30 years of professional investing experience. We see deal flow, I can't imagine it as much as you, but we see 100 to 120 companies a month. And we screen those and diligence those and research those the same way other professional investors do. And then we find 2 to 3 of those that we then launch on our website. We also invest our own capital. We have a very small investment vehicle where we're putting our own money into every single deal, which we think basically brings together the ingredients that enable people to get comfortable, angel investors globally, to get comfortable with investing in this kind of model. We diligence it, we build this term sheet and the investment structure that give protections to our investors. We're very open and transparent, so we're sharing our diligence, we're sharing our research with our investors, and that's what makes it successful from that side. From the other side, from the entrepreneur side, we think there's a gap in some of the funding in the world right now. We call it the Series A gap, where if you look at the statistics, there's a huge amount of seed investing going on, and then it kind of dies at the Series A level. And there's a real gap, particularly in Israel, but I think globally, where a lot of great companies aren't getting funded when they hit that Series A round. And that's really the sweet spot where we're investing. Number one. Number two, we think we can move quicker, and we do move quicker, again, not as fast as you, but than most VCs, and that's important to a lot of entrepreneurs. And we think we can be more flexible in terms of our terms, in terms of the kinds of companies we can work with, and in terms of the industries that we'll look at. We funded recently an air conditioning technology company. Very, very interesting company using some incredible physics and chemistry that came out of MIT. But traditional VCs won't look at it because it doesn't fit in a box that most VCs are comfortable with. And we're looking at a lot of things like that right now. So those are some of the ingredients we think that's made it successful until now.
So what's the minimum amount a standard investor can need to invest in one startup? And why you're talking about accredited investors. This is a concept known in the US. I think you are working with investors from all over the world. So what it means for a French guy want to invest in a startup?
I was afraid you were going to ask that. So the first question, our minimum investment is $10,000 on up. So people coming in can choose any of our companies, any of our deals on our website. By the way, I would encourage everybody to go to our website, ourcrowd.com, and see the deals we're currently funding. And anybody can put in $10,000 on up. We've had people do $10,000, and we've had people do up to $1 million in an individual deal, and everything in between. The average investment is about $33,000 per deal per investor right now, and the average investor is investing in over 3 deals. Once they do one, means they're doing somewhere over 3 at this stage. To your question, right, each country has rules about what an accredited investor is. In the U.S., it's basically you have $1 million of net worth and or have made over $200,000 of income in the last few years. In Israel, it's much worse than that. In Israel, you have to have over $4 million of liquid net worth. In the UK, the rules are different. I don't actually know the rules in France. What I can tell you is the places where we have a meaningful set of investors to date, which is North America, the UK, Australia, and Israel, we know the rules, and we actually have a drop-down menu on the site where you have to then go in and say where your domain is and click and basically register. When we get a significant amount in France, we'll have to work it out.
So I've heard from John that you want to expand this model to other countries. What's exactly the plan?
Absolutely. So we've already done of the 30 companies we've funded, 26 or 27 of them are in Israel. We've done 2 deals in the U.S. and 1 in Australia. We're actually looking at another deal or 2 in the U.S. right now. I think similar to what David said, the bar is higher for us right now, today, to be doing deals overseas, just simply because we don't have the bandwidth, the resources, and the people to sort of work with the companies, keep an eye on the ball. We generally try to take board seats. We want to be active investors, and we want to do investments where we can add value. Certainly the model and part of our strategic goals in 2014 are to, A, increase our investor base to places where we don't have large investor base, but certainly to be looking at companies all over the world. We're looking to probably open an office in the U.S., probably the West Coast next year, and then we have a strategic plan to be opening offices in strategic areas beyond that. Probably in Europe, the first office would be in the U.K., but not necessarily. We're open to France. We're open to I like.
You're doing what you want.
I like the food here a lot better. So but certainly we view this as very much a global model. At the end of the day, in many ways, we're a web business, and we want to be a web business, and that's how it scales. And so we should be doing business and looking at companies and bringing in investors from all over the world. So if I look at our strategic plan for next year, this year we've done about 30 companies, 2 or 3 of which were outside of Israel. Next year the plan is to probably fund as many as 70 to 80 companies, of which we think close to half could be outside of Israel. And there are 2 ways we'll do that. One is by opening local offices, which are our own offices. But the other thing we're already building is channel partners, where we'll work with groups that are funding deals and have successful track records in their domains, and in their geographies, where maybe we'll partner with them and co-invest, and they'll be able to launch a piece of their deal, a piece of their financing on our website. And then we'll be investing alongside them. And right now, we're very closely working with a private equity fund in New York that's specifically focused on a particular industry where we don't focus, has a great track record. And let's say they want to do a $5 million round in one of their companies, they might want to put in $3 million and then put $2 million up on our site to crowdfund. And we're close to getting that deal done.
So now if I'm a startup, am I raising $1 million from your website? So I will have in my cap table 50, 100, 200 investors, or are you building a vehicle to to invest in companies?
Yeah, so we think that's part of the, if I can call it, as part of the IP that we had to build when we launched this. We understood, I should say John, my partner, understood that one of the pitfalls of equity crowdfunding, one of the reasons it doesn't work and hasn't worked, is exactly the question you just asked, which is the question I have with every company in the first meeting, which is, I don't want to have 75 investors all who put in $809 on my cap table. That just does not work. So what we do is, and what we've done, is we've created a model whereby for every investment we do, we created a special purchase vehicle, which is an offshore vehicle, which basically invests in the company, and all of the investors come in and invest in that vehicle. So we basically aggregate all the funds that come in. The company sees one investor in their cap table called Our Crowd, and they have one proxy, which is us, and one vote, which represents all of the shares. And of course, our investors have to sign on to that. They sign on to the fact that we're their representatives. The way to think about it is each deal we do, each company we invest in, we're actually creating a mini venture capital fund. And we're the GP. We're the general partner of that fund, and our investors are the LPs in that fund, and that fund is the investor in the cap table in the company.
Okay, thank you very much. Now I would like to ask you how people can contact you. Because it seems that, at that kind of event or at Le Web, it's very difficult to see 100 startups coming to you and explain you what they are doing. I know what it is, to receive some pitch. So what is the best way if I know that I know some things, I have very good KPIs, what is the best way to work with you? Where I need to meet you, how I need to talk with you, etc.
Well, Jeff Clavier got it right. I mean, at the end of the day, I've written, if you go to Venture Blog, my blog, you'll see my post where I basically said exactly what he said up here, of the however many thousands of companies that I've received pitches for over time. I've only funded companies that I've been introduced to by people. So, for the crowd here, it's easy because you are the conduit, right? We have a relationship. You say, hey, David, this is interesting. X, Y, Z has happened. I take a look. Great. And then either, given the location, whatever, we Skype for 30 minutes to see if it's interesting. Or if someone's going to be in town, then oh, we're going to be in town for this week. Let's meet up. But in every instance, these things are about relationships, and whether it's you or someone else who knows me. And the formula I put in my blog is a pretty simple one, right? Which is, you and I have a relationship that's of a particular value. If the value of the relationship I have with someone else and that someone else has with you is greater than the relationship you and I have, use that as the conduit. And the stronger that connection is, the stronger those ties are, the more likely I will be to engage in the conversation. So get to me through people who, the closer you are with someone who's closer with me, the more likely I'll engage deeply.
Thank you.
I don't have a lot to add to what you said. I think network, most of the deals come from the network. And of course we have an internet site, but when people understand what we do, so somebody explains them, Media for Equity, what it is, why they need it, and how they can use it, then people come to us, and then it's much more fruitful. And then we can really discuss and see how we can exchange and what we can bring to them.
Oh, how to reach us? It's pretty easy. Talk to me. That's it. Yeah, it's seriously the idea of networking and being kind of introduced to is nice one. I think it's very US specific. It's I think much less the practice in France at least or in Europe. Probably because we don't have the same background story. We have 20 years less of venture capital, so the whole system is not at par with what we do, with the way we work in the United States. So basically the advice is go directly to the fund you want to talk to. There are many opportunities like the web or Kima Day or whatever, conferences or events like that where you can meet people. Or just send your business plan, just send your executive summary, and we'll have a look at that. The thing is that, of course, it's much better to send a tailored proposition. Just spend 5 minutes reading the kind of criterions, so that you just check that everything is aligned with what we look for. So, for example, we don't do B2B deals. We don't do stuff like that. So please don't send such kind of thing. But it takes you 5 minutes just to read the website.
So I think we're probably somewhere in between. I think that the referral is actually absolutely important even for us. I have to think about if anything that's coming blind to us we've funded yet, but clearly the referrals work better, and Jeremy at this stage is a great conduit to get to us. Although because we are a web business and we want to be seeing deal flow, our website is very hopefully user friendly and basically says if you're a founder, click here. But I'll just tell you it's dealflow@ourcrowd.com. That's where you want to send your materials. Dealflow@ourcrowd.com, or just come and speak to me. But I do believe that even if you do that, if there's a connection, if there's a referral, that helps, because at the end of the day, it's about people and about credibility of the team. And I'm going to look for ways to diligence and check that team if I don't know them. And if there's a clear referral where I can go and say, well, tell me about the people, that's going to go a long way to getting us to the next step.
Thank you very much. Please applaud our participants. We have 10 minutes for a few questions. So if you have questions to our panelists. You're tired? Yes. We have one.
Yeah, I was wondering which media do you work for?
So right now,
please repeat the question.
Okay, the question was with which media 5M Ventures work? In France, right now, we work with 20 Minutes, that is a subsidiary of Schibsted, so we have some links somehow. And we see that Schibsted is a very innovative group that is doing media for equity in Sweden, and that brings it in France through 20 Minutes. 20 Minutes is a newspaper, free newspaper in France that has 4 million contacts every day in the metro and has a very strong internet site. We have a Clear Channel. It's a leader in outdoor all over the world and second in France. So it's bringing massive outdoor campaigns. And we're now, it's not disclosed yet, but we are now closing with another media group to be very strong in the internet. So this is what we provide.
Thank you. Do you have other questions? If not, thanks everyone. Thank you very much.